Gold, the legacy of thousands of years, the focus of countless wars, is now the scene of a brand new struggle on a brand new front. The world's two largest economies, the United States and China, are now facing each other over the gold wars. This week, economic warfare broke out between the world's two biggest superpowers. A trade war between the US and China has just kicked off. So, can anyone really win a trade war? And what would the impact be on the rest of the world? In the shadow of trade wars, tariffs, and protectionist rhetoric, China continues to hoard gold like a silent giant. Why is this strategy just a financial move? Or is it the first sign of a grand plan to change the global balance of power? Why has China's gold rush returned after a 6-month hiatus? China's central bank has resumed its gold purchases. According to some, this is related to Beijing's desire to stand more firm in the trade wars and secure itself against possible economic shocks in late 2024 and early 2025. The data released shows that China has been increasing its gold reserves since November and continued to do so in December. Some sources say that Beijing has added tens of thousands of ounces to its reserves, while others comment this is a total mobilization of gold stocks. If you remember, China made a similar move in the 2019 to 2020 period. Now, as the United States-China trade war escalates, is it a coincidence that Beijing's renewed gold purchases are happening? The Chinese central bank's gold hoarding appetite has returned. We think not. The signals say Beijing is melting down some of its dollar-denominated assets and replacing them with gold. Some reports even suggest that China is selling United States Treasury bonds. Significantly, the preference for gold over dollars is a clear message to the United States. Some analysts say the trade wars, which were ignited during the previous Donald Trump administration, have not been fully resolved. During the Biden process, global markets are shaken with every additional tariff move. There are inflation concerns on one side of the coin and geopolitical tensions on the other. As the dollar strengthens around the world, gold prices are testing historic highs. Gold, as is well known, is a safe haven against inflation and uncertainty. If we can't make a deal with China, then the tariffs will be very, very substantial. Trump's threats of tariffs or China's retaliations create anxiety in the markets. Will import costs increase? Will inflation rise? This whips up demand for gold. Goldman Sachs predicts that central bank demand for gold will continue, even reaching $3,000 per ounce. This looks like an incredible opportunity for gold investors. But why is China so ambitious? China has huge dollar reserves. In the shadow of the trade wars, the value of these reserves has come into question. Beijing does not want to face the scenario of, what will we do if the United States sanctions us in dollars? Gold is a safe asset to hold, less affected by political risks. The financial sanctions imposed by the West, especially in the wake of the Russia-Ukraine tension, have raised concerns that their reserves could be blocked at any time. It is well known that Russia has also significantly increased its gold reserves. China too seems to be insuring itself with gold against the dollar weapon. This strategy is a reflection not only of the trade dispute with the United States, but also of the global power struggle. Think of it this way. The dollar is the key to United States hegemony in the world. Most of the world trades goods and raw materials in dollars. If China wants to build a UN-based trade network and gold-backed financial system in the long term, these steps make sense. Will gold become a thorn in the United States' side? The Trump administration hoped to bring China to its knees through trade wars. However, the picture that China started hoarding gold instead of kneeling could be worrying for the United States. This is because the United States, while being the biggest dominator of global finance, is struggling with domestic problems such as inflation pressure and trade deficit. When the Federal Reserve raises interest rates, the dollar strengthens, which puts a strain on emerging markets. But at the same time, borrowing costs in the United States are rising. Trump's tariffs risk being passed on to American consumers in the form of more expensive products. As China grows its gold reserves, it could move closer to creating an alternative reserve system to the dollar. Will this jeopardize United States financial supremacy in the long run? Some experts say yes. it is a plan of destruction, while others say it is not that easy because the world is still dependent on the dollar. And what about Trump, the former president who repeatedly proclaimed America first and argued that he was supporting the United States economy by escalating trade wars? The protracted nature of the trade war has increased uncertainty in United States domestic markets. Periods when gold breaks records usually coincide with moments when people's confidence in the dollar is shaken, so this Chinese gold move could be a real threat to Trump or the United States administration, even in a symbolic sense. By buying gold, China is showing that it will not bow to United States pressure. The ounce of gold climbed up to between $2,800 and $3,000 in 2025. China is not the only one behind this momentum, but China's share is significant. Central bank demand for gold, investors returning to safe havens, geopolitical risks, all of these factors together made gold soar. Another remarkable factor, the diversification policy of central banks. Not only China, but also countries such as Russia, Turkey, and India want to turn to non-dollar assets. This will reduce dependence on the dollar. Global markets are shaking with the question, is this gold rally permanent? According to some analysts, yes. As long as the inflationary environment and geopolitical risks persist, gold will continue to make a premium. Big banks like Goldman Sachs expect central bank demand to last until 2026. On the other hand, if the United States and China reach an agreement, the trade war softens, and inflation is brought under control, gold may retreat a bit. But how near or far that day is, no one can say for sure. So, where will record high gold stop? The $2,800 to $2,900 band seen in early 2025 is just a stop. According to some experts, it will not be surprising if it runs toward $3,000. In the big picture, the Federal Reserve's rate hikes or economic data, the possibility of recession, all will affect the direction of gold. However, factors such as the geopolitical environment, the United States-China conflict, and Russia-Ukraine tensions are catalysts that support the rise of gold. China's confident stance. We have gold against bad odds. The United States claims that it has the last word in the trade war, but if gold becomes a favorite of central banks, undermining the authority of the dollar, could this be a blow to United States' financial dominance? For now, this is a long-term scenario. On the other hand, when you think of gold, it would be incomplete to think of it only as jewelry or an investment instrument. It is a strategic commodity. Central bank purchases are often an indicator of geopolitical power, says the World Gold Council. China is building soft power and trade networks, seeking a new economic order with giant moves such as the Belt and Road Project. Where do gold stocks fit into this picture? Beijing is probably looking for an alternative to the dollar system. Can gold be used to instill confidence in the UN-based international payment system? Time will tell, but the term gold wars is not in vain. If the world is moving away from the United States dollar, gold could be the key to this transformation. Since Russia is pursuing a similar strategy, the question is whether a China-Russia gold bloc is forming. The escalation of trade wars may accelerate this bloc. By 2025, when factors such as the United States presidential elections, Federal Reserve decisions, the risk of China's economic slowdown, and Europe's energy crisis come into play, the volatility in gold prices will increase. Whether it is Trump or another administration, the Washington approach may maintain its tough stance against China with policies based on national interest. If Beijing continues to build up its gold reserves, it could at least partially curb the capacity of the United States to use the dollar as a weapon. This, in turn, would fuel the debate in Washington on what course to take. This signals a transformation in the global financial system on a scale not seen since the 1970s. Say, investment banks, which expect central banks to continue demanding gold as we enter the new year. Some may exaggerate, but the dollar has been unrivaled in the international monetary system since President Nixon officially abolished the gold standard in 1971. Now, the UN is slowly taking center stage, and gold can be used as an instrument on that stage. Trade wars, steel tariffs, technology restrictions, allegations of industrial espionage, and, to top it off, gold wars. The end does not seem imminent. In the short term, the United States is likely to maintain the dollar's dominance, but can China, with its silent giant tactic of patience, win in the long run? Some say yes, some say no. What is certain is that this conflict will cause fluctuations in the world economy. While gold is breaking records, the dollar is strengthening. The two assets would normally move in opposite directions, but the theme of uncertainty in this trade war is pushing them both up. This also surprises investors. Will the gold wars escalate if China's gold hoarding accelerates? Russia continues to take similar steps.